Welcome to this webinar, WoW Trades. My name is Alberto Alvarado. Today, actually, it's very off the date. I was supposed to deliver this webinar on the Wednesday 21st. Unfortunately, I was not able to do so because of some personal issues came across, and I didn't have the opportunity to let you all know in advance of it. So this is a webinar that is delivered on this Friday 23rd, September 23rd, 2016. Now it's 3 a.m. in the morning, 20 minutes past the hour here in Mexico City. That means it's 8 a.m., 19 minutes past the hour GMT time. And maybe it is a good idea that this webinar took place in 2 days after, because actually a lot of things happened. It would have been a way more maybe boring webinar on Wednesday, since we were expecting the Fed decision. Now we have the official decision, what happened, the price action after. So yeah, I believe it's a good chance to review what happened, to see and review the trade. So what if we start? Well, quickly, a little bit about me. My name is Alberto Alvarado. I'm broadcasting from Mexico City. I started 10 years ago, 2005. I just blew out my account, my first live account, in less than a month. I lost the real money. Then I decided to take it seriously, to prepare by myself. And more or less 2007, I started grasping the first results of my trading strategies, to lose it all again in 2008 crisis. And then I decided to start fresh from scratch, but adding some intuitional and emotional elements to my new strategy, and that worked well for me. I also believe in working with very simple technical tools like the MACD, like the RSI, like the stochastics. I don't believe in custom indicators. I don't believe in the need to buy robots to trade for yourself, because I honestly believe that the one that needs to adapt to the circumstances is the trader and not the tool. The tool should be the same, configured the same, and the one switching how you read it is you yourself. So that's why I don't believe in spending a lot of money in custom indicators and this kind of things. So pretty much what you will see is the fruit of all these things: time, 10 years of experience, technical analysis, fundamental analysis, fundamental dynamic levels, that I call them that way, in what I wrap into a common sense trading approach. So let's begin. For the ones interested, if you haven't done so, and please allow me a second, here it is. You can go and subscribe to my YouTube channel. You just type in YouTube IIIBB's Trading Room channel. This will show up. You please subscribe. At times I update if things are necessary to do so. If we have open trades and if I decide to close them beforehand, I let you know through that channel. Since this is a weekly webinar, usually 7 days between each webinar is way too much time. So we need a bridge to communicate between webinars and webinar. So that's the best way to communicate. If you feel that this information is useful for you, I strongly suggest you to go there and check it out. Today is going to be a very light, decaffeinated webinar. We are not getting through all the fundamental dynamic levels, all the fundamental in-depth analysis, and this is the off-the-date webinar. I'm going to keep it very, very simple. We're going to review the price action during and after the Fed decision, using the cable as a reference, the pound versus the United States dollar. And we are going to review the open trades. In this case, we don't have any open trade, but the last webinar, we have still remaining one trade that was very close to break even just hours before. So we're going to check how that trade closed in profit or loss. Well, first of all, what I would like to signal you is that I was not able to open the actual trade. You can check that out in the latest webinar. The number, the file, where it was. It was only like 12 hours before the expiration date, the expiration time. The latest time we checked that out, that trade was closed in profit. I'm going to quickly review here on the chart how those two trades from these last 2 weeks look like. So you have an overall idea what happened during and after. Here at this zone, at the 131 during the webinar time, I was explaining, let me close this, okay. I was saying that it was a very good price zone to open a bullish trade for the ones that believe that and shared my opinion. And at least in my case, I opened a bullish trade here just to see it go immediately in our favor. The first trade was programmed to be closed at the ending of the September the 7th trading day, so it was closed here. You can check the previous webinars to see exactly what I said on those trades. On that trade, while it was open, as I was saying, I didn't doubt at any moment. It almost immediately put in our favor, and it closed pretty much at the top. So, well, that's the first one. We opened a second trade at this stage, also at this price, and it was programmed to close at September 14th. So it was here. So it barely crossed, it barely closed at profit. And when I mean barely, I mean 100 pip in our favor. So I want you to keep this in perspective. Yes, the market came against us. I was saying that after having this first breakout, I was having second thoughts maybe on, this breakout, I was having second thoughts on maybe closing it beforehand, but there were very unique aspects on that trade that just let me keep that trade open. There were at that moment still reasons not to close them. So I decided, well, there are some hours just to the expiration date, so let's keep it open. The price actually closed here at profit, more or less 100 pips from our opening price. Then made this sudden sink, came above again, and now here I received the denial bullish signal that I was expecting some hours after this trade was closed, and then it came. This sell-off happened, and now the price is hovering here, more or less at the 1.3015, as you can see here. So pretty much this is how these two trades look like. Both were closed in profit. You can check the exact images on the previous webinar. The last week webinar, last week webinar, there were only remaining 10 hours, and you can check out that actually it closed at the price that I am saying and I'm telling you. The bottom line is this. The information delivered here is as useful as you wanted to make it work. Not everybody dares to open lively a trade here and to show this live performance. Okay. This is the fruit of 10 years of experience. Of course, this is no warranty at all. But, well, an experience of 10 years, well, you learn a lot of things. For example, when to open a trade that immediately goes in your favor. And this is the clearest signal of it. So hopefully if somebody of you follow that trade, well, that trade should have been closed to both in profit. And in any case, you decided just to skip it, well, it's a nice and good idea also. So just wanted to clarify that now we don't have any trades open, and for the reasons I'm going to explain in the next minutes, I believe that it will take some weeks maybe to open the next trades. We have to remember that this latest trade, both trades that we open, I waited, if I'm not wrong, 2 weeks to open it. I was tracking, I sustained the idea that it's very important that you don't push yourself into trading if you don't have the complete convictions and setups that you're looking for. So it's worth it. It's worth it just to wait 2 weeks without any trade open. So and this is a good habit that you need to develop. Not push into things. Don't push yourself into trading, into opening a trade because you're addicted to it. You need to be able to control your emotions, sit on your hands, and wait for the best possible trading opportunity. Like at that moment, I was explaining why this was the best at that moment after this pullback. This was the best trading opportunity. Well, I wanted to start quickly reviewing the Fed. Okay, this is the daily chart. I'm going to switch to the 1 hour chart, to the 2 hour chart. Okay, here you can see is the cable, 2 hour chart. Here's how this it looked like. By the way, the price we closed the trade. The latest binary option binary.com was here. After that, this sell-off happened. It continued moving down, making some bottom here, and this is the Fed candle. The Fed decision that, by the way, was to keep interest rates the way they are. The information after the Fed decision indicates that there's still some good reasons to believe that the rate hike is going to happen this year. I sustain the idea that the market's already priced in a 1/4 of a point rate hike before at least December. In any case of the markets, I believe that they don't see that rate hike happening in December. You can expect a lot of volatility to adapt to that fact. I strongly believe that the markets are betting that at the it shouldn't take longer. In any case, it takes longer to hike the rates. That will send out a red signal, an alarm signal to the markets, and maybe you can expect a lot of volatility. And I would have no idea in what direction. So we will keep an eye on how the speeches of the Fed, and how Yellen refers to this rate hike every time that she shows up in the media, etc. Okay, so well, I want you. This is a no-brainer thing. This is the Fed candle when that decision was released. I want you to look at this candle. This is the volume, a real volume candle, as you can see. For the latest, what is this? Almost 1 month. This is not from September the 5th to today. This is the highest candle, the highest volume candle. So this tells you a lot on what happened, how important this was. But the two interesting things, what happened after. I've been explaining during the webinars that the fundamental trading aspect is not trading the news, but actually what happens after is the real way to subtract the real meaning of the fundamental trading. The market started going up on, well, here lower volumes, but I want you to check this out, how this candle looks like, this big wick just touching the 2-hour Bollinger Band to the pip, and this touching this channel down trend line. And I want you to see the volume on this. So all this resistance almost generated the same volume than this support. So this is something that I was still sustaining that maybe the price could continue going after covering and stabilizing a little bit this moment, try to retest the 137. But all depended on what happened after the Fed decision. This is the first signal that maybe is indicating me that we are actually entering into a very, very volatile consolidation zone for the pound. We had this, and that, by the way, this corresponds to this level. This level is important. Why? I received the denial of that bullish setup here. More or less, the trade was closed here, the latest binary option. So here I had the denial of that signal, and then just afterwards, this happened. So this is a denial of the signal while the market was touching the mid Bollinger Bands. Look at the volume. It's at these levels. After the sell-off, look, the volumes are lower. And this previous swing, that is the resistance that this price touched here, besides the Bollinger Band and this trend line to the downside, look the volume. It makes like a V, up and down. It's like a triangle, you see? This is a very personal way I learned to read the markets. This is not something that you will read in the books. This is something that my experience simply, at times when I see this, automatically this catches my attention, because it makes sense to maybe see that something is not happening randomly. Okay, so this is why I started seeing this price action after having these levels moving downwards. You can see that this mid-Bollinger Band, I have two mid-Bollinger Bands. One is the traditional 20 period, and I believe this is the 40 period. Why I use this? Because try to generate a crossover confirmation signal. At times that works. That is why I use always these two moving averages here. And I want you to check this out. These candles just made a break here at this 14 period moving average, just to continue moving accelerated to the downside. The traditional 20 period moving average didn't stop at all the movement. So this is like the confirmation of what was happening here, that the reasons for the markets to maybe to short here were very important. I was telling you this price action and this sell-off and its correlation to volumes, like a triangle. Yeah. The way it behaved after is confirming that actually somebody else was watching and was getting very nervous on the price making this overall on this high volumes, because that means that at these levels we have almost the same selling interest that we have buying in the buying side here, and all these things correlating to each other could be not very positive for the bulls. Now we see how the market started behaving in this way. Then now it's touching the 1.3 psychological zone, very close to this lower band on the Bollinger Band side. This could be considered as maybe a support, but I want you to watch how the 1.3 has been behaving as a support. It's not a to the pip support, since this is a multi-decade support zone. So when you read and when you understand the word zone in a multi-decade way, it could be a zone of 2, 3, or even 400 pip support zone. So anything above maybe 200 pips or 300 and below the 1.3, let's say 300 pip below, could still be considered like support zone. So what I believe that the market is likely to do, yes, it could stop here. What I do believe that it's maybe more likely to do is to continue to the downside here, to retest these levels. That, by the way, at these levels, we would be at 128.50, as you can see here. The lowest level it reached after touching the highest. Actually, after touching the 128, I'm going to switch to the daily again. This is the 128.50. That is why I believe that the market will continue moving downwards, because we really don't have any real physical evidence of a clearer support. Maybe only this one, the lower Bollinger Band here. So it would make sense to expect the price maybe to move to these levels, the 128.50, that is this level, and then we could expect the market could make a pause here, or even continue moving downwards. It depends on the price action. So moving again to the 2-hour chart, my conclusion on this is, again, we won't open anything so far until we see what happens in the price action side for the next days. I really was not expecting this kind of reaction to the downside. I was surprised. I believed that maybe the price could stabilize or try to get slower to the upside, and then in the retracement, expecting maybe to open another bullish trade, depending on the circumstances at that moment. But now this is really game changing for me, so I will need to watch it closely this day and Monday and even up to the next webinar to see if actually we can track a possible trading setup here. But in the meanwhile, just to sit on your hands, I honestly would only tell you that as you've seen, it works to be patient. You don't need to open 2,000 trades a month. It actually, if you are starting to learn this trading world, the best thing you can do is just to wait for the best trading opportunities and try to adapt them to the way you understand it, because it releases a lot of stress. You don't need a lot of losing. If those are losing trades, you don't need that kind of stress in your life. So now anything can happen. I don't think that this 1.3 support zone will resist, but I believe it will continue to retest this level at the 128.50, since at that level we have another more good looking support that I just explained to you in the daily chart. Then I could maybe expect the market to rebound to the upside, maybe to the 1.3, and to stabilize there. So we are not going to have, in my opinion, a lot of information to justify any trade for the next days. In any case, this is something very interesting or very groundbreaking. You can check my YouTube channel, where I usually update when this kind of stuff happens. In any case, I don't find it interesting. Well, it will be only in the next webinar that we will make a more complete review on what happened using overall the fundamental dynamic levels. So this is pretty much for today. Again, I would like to apologize because I was not able to broadcast at our traditional Wednesday. But this next week, you can expect me as usual on what is Wednesday, September 28th. So this was only an exception. So you can expect me on Wednesday at the same time. That is 13-hour GMT time. So remember that I expect you there. I wish you all a very good and safe weekend. And remember that this was Alberto Alvarado broadcasting from Mexico City. Remember to trade safe, be safe, and bye-bye.